Welcome back to the Arxis YouTube channel, and today we are going to be talking about different types of loans. We're going to talk about what loans are and the different ones that you can get as a consumer. So before we get into anything else, what in the world is a loan? Well, a loan is a sum of money that you, the borrower, are going to borrow from a lender, which that's either a bank, a credit union, something like that, and you're going to pay it back with interest. It seems pretty simple. Essentially, you're renting the money. You are going to the institution, you're saying, hey, I need this amount. They'll go through their process to determine if you qualify for a loan, and we can talk about loan qualifications in another video. Once you get that loan, you then have to pay it back over a preset term or amount of time plus interest. So pretty simple. Now, what are some different types of loans that you could get? Well, the first one is a personal loan, and they're super flexible. You can use them for almost anything. A lot of people use them for home improvements, medical bills if they have them to pay back. You could even use it for a vacation, but that's maybe not the best idea for a loan. With personal loans, they're for a fixed amount that you're borrowing, and you pay it back usually in monthly installments. And the terms on these loans are usually shorter, between 1 to 5 years. It is very important to be aware of your interest rates for personal loans because they can vary based on your qualities as a borrower, the economic environment, and the time when you're borrowing them. Our next type of loans are student loans. These are loans that make higher education possible, but they can sometimes be extremely expensive and a bit painful for the borrower. These loans can be used to help students pay for tuitions, books, or even living expenses when they're going through and getting their education. Some of these student loans can come from the government, which would be subsidized loans. Essentially, the government is paying for the interest while the borrower is in school. Or you could have an unsubsidized student loan where the interest begins accruing from the moment the loan is created and continues to compound while the borrower is in school. So when you're looking into student loans, it's very important to consider whether you're getting one that is subsidized or unsubsidized. Another loan type that most borrowers are familiar with is auto loans. These are used to buy a car. Essentially, you don't have the cash up front to pay for a car in full, but an auto loan is going to be your best friend to take care of that. For an auto loan, the lender is going to give you the money, you are going to buy the car, and then you are going to pay it back over time. It is important to remember that cars lose value fast. The moment you drive them off the lot, that value drops. So be smart about how much you're borrowing and be safe when you're driving. Our next type of loan is mortgages. You need to buy a house. A mortgage is what you are going to get to help you pay for that home over time. It is used to purchase property, homes, land. It could even be commercial property. They come in two different rate types. You can get a fixed rate mortgage or an adjustable rate mortgage. When you get a fixed rate mortgage, that means your interest rate is going to remain constant for the entire life of your mortgage loan. Whereas an adjustable rate mortgage is going to have an interest rate that fluctuates at predetermined periods based on economic variables. And we'll talk more about the difference between fixed rate and adjustable rate in a future video. Most mortgages are going to range in length from about 10 to 30 years. It's quite a large amount of money to purchase a home, so it takes quite a while to pay it off. Now, home equity loans are when you already own a home. You can borrow against the value of the home that you already own. It lets you borrow money using the value of your home as collateral. Basically, it's like turning your house into an ATM, but just like any other loan, if you don't pay it back, your home is up as collateral and it could be seized by the bank. So equity, it really is important to remember, is that difference between your home's current market value and the outstanding mortgage balance that you have on it. Most homeowners use home equity loans to make big home purchases, such as refinishing a bathroom or redoing an entire kitchen. So they're using that equity to borrow the money to improve and increase the equity in their home. It can be a win-win. Now, credit cards. As borrowers, this is usually one that we are pretty familiar with. If you've ever carried a balance on your credit card, that's actually a type of loan. Credit cards let you borrow money, but if you don't pay it each month, you're going to get hit with additional interest. So essentially, the best way to describe a credit card is that it's a short-term loan system that individuals can use. You get a credit limit that tells you the maximum amount that you can borrow, and your purchases are deducted from that credit limit. So if I have a $100 credit limit, which would be very low, and I go to the store and I spend $50 on groceries and another $10 on gas, I've used $60 out of my $100 credit limit. I could only put another $40 on that credit card without going over my limit. Now, every month, my institution's going to send me a bill outlining all of the purchases I've made that month and any interest charges, if applicable. And it's going to tell me what my minimum payment is due for that month. So keep in mind, you don't have to pay the full balance on your credit card every month, but the interest amount is going to continue adding based on the leftover balance from the previous month. It's also important to note that if you are making on-time payments and you're maintaining low balances on your credit card, this is actually going to help you increase your credit score over the life of your credit card. That was quick and simple. There's lots more details we'll go over in future videos about loans and the different characteristics of each one. But I want to ask you, what types of loans have you used in your life? Comment below. We'd love to hear from you. And always, as a reminder, we have our Banking Ed Hub that's powered by the Arxis Learning Portal. We've got personalized learning paths, tons of courses on different financial topics, ranging from CECL to ALM to budgeting to economic forecasting. You can access important documentation and even register for our upcoming webinars. If you enjoyed this video, don't forget to like and subscribe. We'll see you next time.